close out the show, the conversation on Tesla. Joining me now is David Nicholson, Chief Research Officer at the Futurum Group. David, first off, happy Tuesday, and thanks for joining me. You know, I'm going to leave this open-ended because I don't know if there's a more debated stock than this one, but it absolutely garners activity and interest. So I'm going to give you the floor. You give me your assessment of Tesla.
Well, good to see you, Alex. My assessment of Tesla is as follows. Tesla, the stock, Tesla, the company, very little of that valuation or the real value of the company has to do with the cars themselves. That's the first thing to understand. They are software platforms, first and foremost, and you've got to take Elon Musk's advice on this one. You don't want to own Tesla stock unless you believe that Tesla is an AI company. If you look at the true value of the company, it's made up of 1 part cars, 1 part AI, sprinkle in a little software, and robots aren't even included in the mix. Imagine Apple including the entire iTunes universe or the iPhone universe in their valuation. Some look at Tesla in the future and say that that's what's going to happen with robotics. So it's a bit of a mixed bag.
Yeah, in some ways, it's almost like a call option on the future, right? I mean, this is a company that is on the forefront of so much of this technology. And when you look at it, obviously, there's a dynamic CEO who, of course, has brought in himself, scrutinized moments over the last year in particular. But that's all kind of the Tesla experience in many ways. You get the good, you get the bad when it comes to the dynamic leader. But when you got the news out of Qatar Economic Forum today, he's going to be around. So does that ease investor concerns, or is Tesla graduated to the point now where they can move on from Elon Musk?
I think it should ease the minds of investors. It's just going to infuriate those who are keying Tesla cars. But I don't think that's a real mover long run. If you look at things like the car sales numbers around the world, much more important is considering what do tariffs look like in other countries vis-a-vis China and their competition with BYD. So now for investors, it's a great thing that he'll be a part of it. And yeah, this is part of the Tesla stock ownership experience. If you don't want to be on a roller coaster, go take the river cruise instead.
One thing, David, I think that is underappreciated is that Tesla did achieve profitability, several years ago and did turn that corner where so many of its kind of pure play EV, pseudo-autonomous driving companies never have rounded that turn. And you look at just the core business, even if it is only 25% of the valuation with the sale of vehicles, that's a cash flow positive operation. It's able to kind of fund this other stuff. So unlike these other companies that require that leap of faith, but also the fact that maybe equity is going to get floated down the line or big debt offerings are going to come, Tesla in many ways proved the concept and was able to kind of survive that survive that R&D stage during the zero interest rate time. And they were there ready for when interest rates went off that zero bound. How important is the fact that, this is a profitable company that we're talking about?
Yes. Now, it's critically important. Look at the startup community. They make huge bets on founders who have been successful in the past. Your track record is critically important. So if you look at capital moving in the direction of advanced robotics, again, this is something in the AI conversation that's often left out. It's the physical incarnation of artificial intelligence. We fully expect that over the 5 to 10 year time horizon, advanced domestic robots will be in many, many, many homes. And so, yes, it's absolutely critical that people can point to a track record of defining what the future will look like and then forging that actual future.
When you look at its competition worldwide, so many names have popped up, and of course, they're car companies. Is that the best place to look? Is it a name like BYD? Is it a traditional legacy automaker here in the US, a Ford or a GM? Or do we need to look to the Nvidias, the Microsofts, these companies that are on the forefront of AI as its true competition?
Yeah, so the answer is yes, all of the above. Competition is coming from all angles. If you're honing in on just the cars, I would say most significantly, it's going to be EVs coming out of China. Yes, domestically in the US, legacy automakers are making headway, but the demand just doesn't seem to be there overall to drive massive uptake. The demand for those Chinese EVs, however, it's there, and it will only be tempered by, frankly, tariff policy, not US tariffs. Yes, US tariffs, but mostly we're talking about tariffs imposed by other countries on Japan to stem the flow of those vehicles. The rest of it on the AI side of things, absolutely, it's Apple, it's Nvidia, it's the usual suspects. They will all be vying against Tesla. Look at Grok 3 as an example. In the AI space, they're doing battle with Anthropic and OpenAI. It's a clash of titans on a lot of fronts.
One thing's for sure, Tesla's going to continue to make news headlines and headway on some of this R&D and the future of AI and robotics. Looking forward to it, and thanks so much for joining me, David Nicholson of the Futurum Group.